All right, so in this video, I want to share with you 3 chart trading methods that maybe you don't know about. They're not anything advanced or anything technical, but what a lot of people do, I find, is they focus kind of only one way and they think about it only one way when it comes to trading off the charts. But there's a handful of different ways when it comes to trading based on the charts. So we're just looking at price movements and how they behave. So I want you to kind of, when you do this, is look at how you make trades and which method you've kind of been following along with. And if you're open to the fact, then you might actually try some of these other methods. So let's get started. I'm going to go in and take a look exactly at a chart. I've got things with yellow and blue just to make things easier based on the moving averages here. And what we're going to do is get rid of some of these technical analysis lines. And we're going to start out with kind of the first method. And the first method is trend following. So when you're trend following, it's kind of a normal, very basic and common approach where, hey, you know, we get into the stock here, and as it continues to kind of move up, we're following the trend. So this would be kind of all these yellow bars. We're following the trend of what it's going. Now, this could be to the bullish side, which is what we've got here. And in many cases, stocks do go up. So we're bullish, and then we go ahead, and there it is. We're following that trend because this is that moving average of about 20. Could you do a different moving average? Sure, you could do a 30, a 40, a 50. That depends on the time frame you like to trade. But in either case, we're following the trend based on that moving average. Now, you could also do a trend following based on a short side, meaning selling first. So if you didn't know, you could short sell or sell first and buy back later. So we're trend following here. So all the bars here in this case are kind of blue or negative. So that's kind of the first method. The second method is we've got breaking away from the moving average. So we're breaking away. And this is what I would say a lot of people like to do as far as trading goes, and as far as, hey, I want to find the next hot stock. So what they're doing is normal price is kind of price, you could say, is just wiggling all over the place. And you don't really have a true accurate price in theory because it's a constant movement. It's like an organism that happens all over the place. So what you really do have is a true price at that point in time, but it's always wiggling and moving. So normal accurate price, you could say, is the moving average. So let's just say, for conversation's sake, our moving average is more of an accurate price across time or a longer duration of time. And whereas the current fluctuations is either overbought or oversold. So what people are actually looking for is for a break away or a breakout. So let's say you're trading here around that moving average. You're looking for this movement to break away from the moving average. Okay, so we've got a price point. We're looking for it to break out or move away from it. Now, this works in the upside, but it also works on the downside. So we're looking here. Here's the current price. Let's say at this point, we're breaking away from the moving average. So if you're shorting, you're here. You're breaking away, meaning going to the downside. So you have it to the upside, breaking away, or to the downside where you're here, breaking away from there. Okay, and the third and final thing is really coming back in to the moving average. So when you're coming back in, this is when things are broken away too far. So let's say over here, you say, hey, you know what? I want to take a short position. I want it to come back. Or this is also known as coming back into the mean, or coming back to average, coming back to the mean pricing. So we're far away, stretched from the moving average, or if prices have ran quite a while, we come back into the average. So there it is. We come back into that movement. Now, this can also happen when prices get oversold. So let's say we've got price that broke away quite far. Now we're looking to come back in to that average as well. So my point here is that when you're starting to look at those things and you're looking at these trends, and it doesn't matter which stock it is, when they get too far stretched one way, they're coming back into the average, okay? Or they get too far away from it, they come back into kind of an average. Now, which average? That's up to you, depending on the duration you like to trade. But it doesn't matter which stock. When they get too far away, they're trying to come back in. Or vice versa, they get too far away, they're trying to come back in. Or they're here, they're holding the average, then they're trying to break out. Okay, so they're holding the average, they're trying to get away from it. So anyways, those are kind of the 3 methods and 3 kind of things to look at as you're trading and you're looking at prices. And by all means, we also do some recaps here as far as looking at technical stock charts for looking at stock analysis. So by all means, feel free to put a note in the comments down below. I'll be happy to check out your ticker symbol. Anyways, thanks for joining me. Truly appreciate it. Feel free to check out the website, and I will see you in the next video. Take care. Bye-bye.